elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
Guys, welcome back to Goofy Investing, where we talk about investing in the stock market. This is still the underground, okay? This is a stock request on a ticker analysis for ticker LMND, Lemonade, all right? It's a popular retail stock. We're going to be going over and doing stock analysis. This was requested on my Patreon. And with it being a Patreon promotional, it goes on my Patreon first and then follows onto YouTube later. All right. So, real quick update before we get into the actual stock analysis, because I haven't posted on YouTube since last weekend and a lot's happened. My SEMrush position, I got bought out by Adobe, guys. I mean, if y'all are on my YouTube and following, you all know this. And in keeping with transparency on my channel, I sold SEMrush, guys. All right. So, once the acquisition was announced, the stock will flatline until that deal closes. So the upside is capped while the downside is there. So I decided to sell my shares. As you can see, this huge cash position of 40% of my portfolio is pretty much the liquidated SEMrush position, $87,349. All right. So there that is. Also notice before I do this analysis, all right, I'm not a Lemonade shareholder. So, my opinion is my opinion. It is what it is. All right. So with that, all right, if you want access to my next stock picks coming up, all right, check out my Patreon. I've already announced my next plays. There's 2 stock picks on there. Free trial set up. This is the last week to capture that free 7-day trial. Check it out. Get on there. If it's not worth it at the end of the actual trial, just actually cancel the subscription. You won't get charged. No harm, no foul. All right. All right. So now that we got that out of the way, let's talk about Lemonade. We'll do a sniff check on their valuation. All right. Valuation is okay. All right. We'll assess cash position, $369.40 million. Debt is $151.70 million. So for all extensive purposes, net cash at around a 2 times level ish, a little over 2 times. Enterprise values at $4.84 billion. All right. And price to sales, they're working with about 7 times on an average. All right. On the trailing, they're at 7.5, and on the forward, they're at 6.91. Nice little spread. EV to sales, of course, a little cheaper on the forward end, 6.64 times. All right. Profit margins. All right. Profit margins. I could tell that this actual business is still growing. All right. It's still being built. And there's a lot more runway for accretive expansion of margins and so forth. So there that is. One thing that I notice about the Lemonade business model, which we'll go back here, the market cap is trading at 5.03 billion. This insurance company is headquartered in New York. One thing I've noticed about their model is they sell all of these insurances, but I'm not seeing the health insurance portion, which I kind of like. I think that this company may start delving into health insurance as they get to more scale for their next stint to disrupt the insurance industry. That's just a little hunch I got. When will this happen? I think that this will happen when they become a bigger company. All right. And when I mean bigger company, I don't mean like when they get to 100 billion. I think that when they get to the 30, 40 billion market cap mark and they got enough customers and so forth, they could start disrupting the healthcare industry. All right. So now, this actual business model, let's talk about it. I've digested their earnings, looked through their 10K and so forth. their business model uses an AI component to actually calculate and maneuver within their business. It's pretty cool. I think that a lot of insurances, they're using different modes of data analytics, but this generative AI incorporated into their actual underwriting process and claims process does actually benefit the actual business model for this company. All right, it's going to be more accretive long term to margins, and they can always improve the AI going forward. All right. So the way I see this company is this is more of a financials sector. I view the insurance industry as more of financials and so forth. All right. If you know me and you've been here a while, I do not like to invest into financials, banks, and insurance. I got one play, and that's SoFi. All right. And that's probably as good as it's going to get. All right. So moving forward, let's look at actual revenue consensus estimates. Let's price the growth. Let's see what we're working with. All right. Great growth rates. Listening to the call, reviewing their earnings, everything is kind of firing on all cylinders. They're experiencing the reversion of growth. We'll go to the actual earnings summary history. As you can see, their growth rates are speeding back up from the past 5 quarters. All right. About 5, 6 quarters ago, they saw a little bit of depression in their growth rate and a little depression in that actual market sector, but quickly to rebound. So there is some cyclicality to the growth. Will they get back to 100%? I don't know. It's going to be harder as they scale more and more. All right. But it is possible. I think how much growth can they capture on their reacceleration of momentum and market dynamics? I think me personally, I think they can probably start growing 60% on the reversion, capturing growth acceleration. That should command higher premium. But keep in mind with the cyclicality, the premium on that sales will go down as the growth rate reversion back on the down cycle on the latter dates kick in. Okay. Um, so let's talk about the earnings call and my impression of management and what I think about it. All right. So co-founder, CEO, management, um, president, and co-founder, I like them. All right. I really like this management team. I think they're on their way to do something special. I think that the actual executive management have a bigger picture vision to this. All right. I think that this is a disruptive company for all extensive purposes. And I think that they have big plans to continue to disrupt the whole insurance industry. Even though they're not in every insurance industry sector or subsector yet, they will be. I anticipate that they will be. And it's never going to stop with these guys. All right. Um, Management team, they all look young, look hungry for growth. I like it. I like the setup there. The earnings call, I noticed that they are retail shareholder friendly. So they were going into a Q&A from retail investors, which I really like that. I like that dynamic to where they listen to the people, even the little guys, okay, and they take everything seriously as it pertains to shareholder returns and so forth. All right. So I like the actual dynamic within their ratios of gross margin and so forth, aligning with the premiums and so forth. So if there's lower premiums, the gross margin expands. I like the dynamic of how they're running their business model and how they're growing and so forth. They're not too aggressive on loan loss ratios and so forth. They're not pushing it completely to the limit, which I like to see, but they are doing it in a responsible manner to deliver durable growth that's actually helping to expand the margin in a healthy pace. Okay. So, oops, bear with me. All right. So let's talk about those margins. All right. 5-year average on Lemonade. All right. They were looking at -100% EBIT, near a -100% EBITDA, and -100% ish of net income margin. And they had a -40% free cash flow on their 5-year average. Dramatic swing to the better improvement side on their margins. Company is guiding for positive adjusted EBITDA in Q4 of next year. All right. So with the synergies of their earnings growth and so forth, we can expect expansion on these margins to the better to go into that positive EBITDA sector. That income is slightly above. This is depending on how they pull those levers, and depending on their growth rate, very possible that, this company can see positive net income margin probably in the latter half of 2027, I'd assume. All right. Depending on how much they want to push the business and so forth. All right. So let's talk about the 10K. Let's talk about the 10Q and so forth. All right. Reviewing the 10K, PCAOB, everything checks out. The auditing checks out. Everything is good there. I'd expect nothing less from a company trading on the New York Stock Exchange. But either way, I'm gonna do the double checking to make sure everything is good. Derivatives. All right. We do have derivatives out there. And those derivatives are warrants. All right. Let me pull it up. And these warrants expire. It looks like February 9th of 2026. All right. And these warrants outstanding authorizes management to sell or issue 3.3 million shares of warrants. Okay. Let's go back to the financials on their income statement. All right. Weighted average shares looks like 71.1 million. There is slight dilution, but I believe that given the rate of their dilution compared to their growth, the dilution ain't nothing. In fact, I'm really bullish on the rate of dilution versus how much the company is growing. But with that being said, all right, their stock-based comp and RSU units. I've calculated everything, and I've done the actual rating on the quant. So, I mean, if I calculate everything with their warrants, the RSU units, you're looking at maybe a dilution rate of about 20%. All right. You're looking at a dilution rate of about 20% in 5 years for exercisable purposes. All right. These restricted stock units are more insider incentives for insider execs and maybe some mid-level, managers down in those mid-levels. They might get a little bit of that, but all in all, most of it's going to the actual execs. All right. So what does that mean? As I digress with the video, let's talk about how I assess they're doing as a company. All right. And what do I think about the investment proposition? All right. So with the current valuation right now and the premium that they're selling at, I assess that I assess that people purchasing this equity now are purchasing a discounted premium on the equity at its current valuation. What I mean by that is their premium of sales, although maybe justified, I assess the company is trading at fair value. After the warrants issuance and after the RSU units and the pace of dilution and then rating of their growth projections, all right, I got this in 6 years. I got this company at a 20 billion market cap, but with further dilution and all of those actual exercisable units and everything, I got this at a $200 a share stock in 6 years. All right. What do I think about the investment proposition? Is this a good company? Is this a good investment? I think that this is a good company trading at a fair value. I assess it to be a good investment. But to me, is the juice worth the squeeze? No pun intended. I assess it ain't. Not for me, at least. If you want a safe growth business model and vehicle to get you there, more of a nice steady incline to that 200 a share in 5 6 years, and that's about a 2 to 3x. All right, after the dilution, you're looking at the 20 billion market cap, but at 200 a share. All right. Um, I think it's okay. You'll out. I think Lemonade investors will outperform the market overall, and they'll get nice moderated growth, which 5 6 years at a 2 to 3x is pretty good. All right. Me personally, I like to bag monsters for very cheap. I like to multi bag way more. And I like to be in business models don't that aren't centric to fixed rate and loan loss ratios. This is why I don't invest into financials, because oftentimes with financials you're going to be dealing with fixed rate profits, and to be balanced off and levered with loan loss ratios. And to me, I really don't like that. I like that's really not my style. All right, when I like what kind of business model I like to invest in. All right, so overall I think it's a good investment. And it's a good company, but I don't assess it's a great investment with a great company at a great price. So I think it's okay. I hope you guys got value out of this. Like and subscribe. Hit the thumbs up button. Check out my Patreon. I thank everybody for their support. It means the world to me. And with that being said, I'll see you later.